Hey guys, Dave Keller here from Market Misbehavior. Actually on the road this week down in Naples, Florida, visiting our in-laws, or my in-laws, for the first time post-pandemic beginning, which is pretty cool to be on the road. Certainly an anxious experience at times, but overall I'm super thankful that we're able to come down and start the process of reconnecting physically with people that we love. You know, what I wanted to talk about today was bull and bear phases. You know, when we see a market in transition, which I would argue we're in right now, you have charts that sort of transition from accumulation phase to distribution phase, or accumulation phase to consolidation phase. What do we mean by those different phases of the market, particularly the transition from bullish to bearish phase? What can you do looking at the short-term dynamics to understand the long-term trends and how they're shifting? So today we'll talk about bull and bear phases using the ARK Innovation Fund as our example. So a lot of times what I've learned analyzing hundreds of charts a day and thousands every week is that you have to simplify. You have to take your technical toolkit and then have a way of summarizing the overall conditions. Are we in a bullish or bearish phase, and why? And a lot of times we get too caught up in the short-term movements, what we call the flickering ticks, you know, the short-term noise of the market, and we forget to take a step back and look at the long-term. So this discussion is all going to be about taking a step back, looking at the long-term trajectory and what signals you can use to understand when something is transitioning from a bull phase to a bearish phase. Before we get there, I hope you're enjoying all the videos that we're putting out. That we are putting out. If you are, I hope you'll subscribe to our channel. It'd be awesome to have you along this journey. Also, if you like this video, please give us a like. We would absolutely appreciate it. Finally, put a comment below the video. Do you see the ARK Innovation Fund going higher or lower over the next month, and why? Let's get to the chart. All right, so here we're looking at the ARK Innovation Fund. We're looking at a 2-year period, going back 1 year, 2 years back to sort of early mid-2019. Now, if you followed the ARK Innovation Fund, and most of us have at this point, you can know, much like the rest of the market, bottomed out in March of 2020 and then began a pretty good uptrend. What's interesting about the ARKK is while the S&P and other indexes were sort of, you know, pushing into a June high and then kind of pulling back a bit, you can see that the ARK Innovation Fund actually pretty much continued on a relentless uptrend all the way through February, right? And so from March of 2020 to February of 2021, with a brief pause in September of last year, a brief pullback in October, and again, that's in line with the market overall, you can see it accelerated into year end. It continued to accelerate higher in the new year, and you can see the relative performance, which was pretty much in an unabated uptrend through the course of that 8 or 9, 10, 11 month period, right? From the March lows to early 2021. Look at how things changed there, right? And you can just focus on the relative strength at the bottom. This is a chart where the relative strength was positive, where it was outperforming the S&P 500, and then transitioned from mid-February to when it was underperforming, when it has been underperforming really through this week. The pattern of lower highs and lower lows on the relative strength. And here again, we're just using a simple ratio of the ARKK versus the SPY. So if this line is going up, the stock or the ETF is outperforming. When it's going down, that means it's underperforming. So from mid-February through late May, the fund has been underperforming the S&P 500. You've been better off owning other things rather than the ARK Innovation Fund. Now, let's talk in particular about what some of the signals have been during this transition. So the first off are the purple lines that you see here, which is a bearish engulfing pattern. Now, on our channel, we've talked a lot about bearish engulfing patterns. It's a classic signal of market topping characteristics. And essentially what it means is the market moving higher, price moving higher, but the momentum actually coming down. So every time price moves higher, there's less and less upside momentum behind those up moves. And that's pretty classic for the end of an uptrend. The exhaustion of buyers is basically there's all this momentum pushing prices higher, all this buying power that's creating more demand than supply essentially. But at some point starts to lighten up, right? The train starts to run out of fuel. The car starts to run out of fuel, and you're kind of going higher and higher, but there's less and less momentum behind it. Eventually, there's not enough power to push prices any higher, and they start to come off a little bit. And again, one of my mentors, many of them talked about how the markets go up the escalator and down the elevator. And that's basically what you saw with the ARK Innovation Fund, right? In 1 month, you unwound about 3 to 4 months worth of gains from November to February, all of that was gone in a couple of weeks when the market came back down. Second thing that we can look at is this pattern right here. This is after the initial pullback and then this consolidation phase. So a distribution and then a consolidation phase, which is a sideways range, right? Sort of an equilibrium phase where buyers and sellers are essentially in equilibrium, no real side one or the other taking control. We're sort of in a sideways mode, revolving around an equilibrium price around $120 a share. That's where basically was the fair value for ARK from mid-March to late April, based on the fact that price was revolving around that point. So if we take the highs and we take the lows, we can take this consolidation pattern. You could draw it more as a rectangle if you like, but I was taking the lows there. And then we finally broke out of that pattern. So that pattern, that idea where you sell off, you consolidate, and then you again sell off and break support is a fairly negative pattern. That tells you things are getting, again, there's more appetite for lower prices, or there are not enough buyers to push us back to the previous highs, and overall, it's a very negative pattern. Look at the Fibonacci levels, which are these horizontal lines in blue, and look at how well ARK has lined up with those Fibonacci retracements. That first sell-off in March was a 38.2% retracement of the March low to the February high. So look how we came right back to that level. We bounced off it again in late March. And then when we finally broke down through that level in early May, that was the signal that things were really starting to get a little bit uglier. From there, you can see we moved right above the 50% retracement, and since then have bounced higher a little bit. We talked about Fibonacci retracements a great deal in one of our previous videos, I think last week, on Bitcoin, and applying Fibonacci retracements to that. So if you don't understand what I just showed you, make sure you check out that video as well. You'll also notice, and I'm adding to the evidence here, we broke down through the 200-day moving average. So very simply, when price is above the 200-day, we're in an uptrend. If it's below the 200-day, that's in a downtrend. People call that sort of the long-term smoothing mechanism, just a very basic trend following tool. And you can see we broke below there in early May, signaling an overall rotation again from accumulation to distribution. So all of those signals all confirmed that we had rotated from an uptrend. And again, just look at the highs and the lows, right? An uptrend, a pattern of higher highs and higher lows, to all of a sudden a pattern of lower lows and lower highs, right? Since then, the highs keep getting lower. We are unable, every time the price bounces higher, we're unable to regain the previous swing high. And that's classic downtrend behavior. Now that we've looked at all that, go to the next panel down, which is the RSI. Now, the RSI is a measure of momentum. It's called the Relative Strength Index, and it essentially looks at what the price is doing right now versus what it normally does. It essentially says what, over a period of time, what's the average up day and the average down day. It takes a ratio of those two, runs some math to smooth it out a little bit, uses some exponential moving averages, and then at the end shows you where we're at relative to sort of the normal trend. And so when the RSI is at 50, tells you essentially we're in a normal trend behavior, normal momentum relative to what we've been, sort of an absence of real strong momentum one way or the other. When the RSI is above 70, it tells you we're overbought. We've moved too high too quickly, normal, based on normal price behavior for this asset. And when the RSI is below 30, that means we're oversold, gone too low too quickly. Look at what happens during a bull market phase, right? A bullish phase here. Take sort of May of 2020 and look through February of 2021. You see how the RSI during upswings will often become overbought. During pullbacks, which are normal during an uptrend, you rarely get below an RSI of 40. That's sort of the bullish range, overbought to RSI 40. Look at what happened when the stock's been in more of a downtrend, when the ETF's been more of a downtrend. You see the RSI will become oversold at times, and the RSI on a bounce higher rarely gets above an RSI of 60. So that's more of the bearish range, oversold up to 60. So during bull market phases, the entire range of the RSI goes higher. During bear market phases, the entire RSI goes lower. I first learned about that in Connie Brown's book, Technical Analysis for the Trading Professional, when I was studying for the CMT exams years ago. And it just completely struck home with me. Basically, as a long-term investor, you could see how the ranges would fluctuate when something was in a bullish or bearish trend. So let's relate that, what I just taught you or what we just discussed, to what we're seeing now on the ARK Innovation Fund. You can see that the RSI was in a bullish, RSI range until March, and all of a sudden you become oversold on the sell-offs, and we've been oversold a couple times since mid-February. You can also see that on the rally there in April, we did not get above RSI 60. So overall, we have transitioned from a bullish range on the RSI to more of a bearish range on the RSI. That is pretty key, and let's take it to where we're at right now. Now we've had a scenario with the ARK Innovation Fund underperforming, the relative strength transitioning from going up
to sloping downwards. We are now below the 200-day moving average and testing that from below. And a failure there would really confirm a bearish trajectory on the ETF. We are testing the Fibonacci retracement 38.2% from below. So now that we've found support there, we broke below it. We're now testing that from below as resistance. If we would fail there, that would signal, again, confirm a bearish behavior. The RSI is just below 50, so it's nowhere near 60. So if we would hit any sort of top now and roll over, that would, again, confirm a bearish phase for the ETF. So what would tell us that the trend is not bearish anymore? We would need to see a number of things. Number one, we would need to break above the 38.2% retracement level and break above this Fibonacci, the 200-day moving average. Both of those key resistance levels would have to be violated to the upside. We'd have to follow through to the upside to confirm a break above previous support that has now become resistance potentially. We would also have to break above this trend line, taking the February high, the April high. If you take that to where we're at now, it's around 115 or so. We would need to get above that level and confirm a breakout above that trend line. That would finally break that pattern of downtrends. The next thing you would need to have is a higher low. You'd have to get a low above 100. So after you break out, you'll pull back at some point. Are we able to establish a higher low, right, and get above 100? It's interesting, by the way, that ARK Innovation Fund has bounced off of the 100 level. Big round numbers often provide support, just like they provide resistance as they did back here in October. So we break above the 38.2% line and break above the 200-day moving average, break above trend line resistance, and establish a higher low above 100. All those things happen. The RSI would most likely get above 60 at some point there, and that would be the final thing that would tell you we've transitioned from a bearish phase to a bullish phase. But at this point, given everything that I'm seeing, given the prospect of potentially higher rates, which should provide a good headwind for a lot of the things that the ARK Innovation Fund would be holding right about now, overall certainly seems to be in a downward trend, a downtrend or a bearish phase until proven otherwise.
So that's the breakdown of the chart of the ARKK, the ARK Innovation Fund, and talking particularly about a rotation from bullish phases to bearish phases. A lot of times it's easy to get caught up into short-term movements, and when something like ARKK bounces this week, it's easy to get sucked into that rally. However, by taking a step back and looking at the overall trend, are we in a bullish phase or a bearish phase, and how can you describe that using some of the techniques that we've broken down? If you look at some of the charts that you are invested in or that you were analyzing this week, I bet if you take that step back and focus on bullish or bearish phases, you'll make sure that you lean into the trends that are working, lean into the bullish trends, lean away from the bearish trends, overall survive and thrive as you go on as an investor. If this sort of thinking about investor decision-making, behavior, using charts, technical analysis, behavioral biases, all of the above is of interest to you, I hope you'll subscribe to my channel. I'd love to have you along this journey. Also, if you appreciated this video, give us a like. We'd certainly appreciate it. Finally, put a comment below the video here. Do you see the ARK Innovation Fund as more bullish or bearish for the next month, and why? From everyone here at Market Misbehavior this week in Naples, Florida, wish you well, stay safe. We'll talk to you again soon.